Okay, well, thank you very much. If everyone can please be seated, I'll get started. I don't have a lot of time, even though I have been given a whole half an hour this year. I still have a lot to cover in a very short space of time, so let's get started. First of all, I'm actually quite overwhelmed by the attendance to this session. Regulation doesn't always pull in the crowds, so I'm quite excited that there is a fairly respectful number today, so thank you so much for attending. For those of you who don't know me, I'm board director at the LBMA, but also the general counsel. I actually joined the LBMA 3 years ago, and unlike Ruth, my sort of longest time in a job has been 4 years. And so usually by the 3rd year mark, I do start thinking about, what else is out there? Have I reached my sort of maximum in a certain role? I can safely say that is not the case at the LBMA. I actually don't even have the time to look, even if I was thinking about looking. So I'm hoping some of you might be delighted to hear the fact that I'm still around, and I'm hoping that I might even make it to more than 5 years. Others might be a little bit gutted, so I'm sorry, I'm here to stay. With that introduction, first of all, thank you for the feedback I received last year. The key response to my session was, we need longer on the regulatory update. 10 minutes is not enough. So thank you so much, and I hope you don't regret that now that I have half an hour. With that, I have a lot to cover, but I had to be very selective in terms of what I do. If I go too fast, or you don't have the opportunity to ask me any questions today, I'm still around. We have a regulatory forum tomorrow at 3 o'clock, which I hope will explore some of the information I provide to you today in a little bit more detail. Actually, I did have one question, so think about it when I'm going through my presentation, and if you can send your answers in towards the end of the presentation, I look forward to receiving them. And the question is, rather than calling it a regulatory update, what title can I give this segment? Because I think regulatory update is a little bit boring, even if I say so myself. And no, Shakira does not count, because I've had a few people think that that's a better title. No, it's not. So come on, come up with some ideas, send in your answers, and I'll try and reflect it next year. Right, now let's get cracking on to some of the important topics. World of regulation. LBMA taking a proactive approach, and has been taking a proactive approach for the last few years. And that all started with benchmarks. I joined in August 2014 when we had to transition the silver fix to the silver auction process. And since then, the LBMA has tried to get ahead of all regulatory requirements, expectations, engaging with regulators, a lot of outreach, making sure that the message on behalf of the precious metals market is being heard. And we've been doing that all this time. We launched a precious metals code, a global precious metals code, the first standalone code to ever be introduced for this market. We've launched phase 1 of trade reporting. We've formalized an incident management process. All this speaks to conduct and transparency, taking a proactive approach. We've done a lot around responsible sourcing. I mean, the list is endless on responsible sourcing, but some of the key points I'm going to be highlighting is the conflict minerals regulation, the OECD alignment assessment, the implementation of responsible silver guidance, the new version of responsible gold guidance, bullion bank reporting. There's a lot that's gone on as far as responsible sourcing is concerned. And then there's all the wonderful financial services regulation, MiFID II, net stable funding ratio, benchmarks regulation. The list doesn't end there. There's a lot more other regulations I could actually speak about, but in the interest of time, those are the only 3 I'm going to highlight for today. But before I do all of that, a quick checkpoint. 2 years on from the Fair Effective Markets Review. This was the review that was conducted by the Bank of England, the UK Financial Conduct Authority, and the Treasury. It was looking at ways on which the markets, the FIC markets, which also included precious metals, can provide for a fair and effective market. The LBMA was very engaged in helping and working with the regulators on explaining how the precious metals market works. So we made a commitment back in 2015. And today, I'm delighted to say, we've delivered on every commitment we made 2 years ago. And that commitment I'm going to explain a little bit more. Firstly, I've already mentioned the Global Precious Metals Code. It was not an easy or straightforward task. We had the FX Global Code. The FX Global Code was implemented in May this year. So whilst we had a bit of a backbone to work with, or a skeleton to work with, but the FX Code is only relevant for the FX Code. We can't just copy and paste it and implement it for the Precious Metals Code. So we had to make sure it was tailored, it was relevant, it reflected best practice in precious metals, and it was fit for purpose. So thank you so much to everybody who took part in the consultation that the LBMA launched back in December 2016. And we got a lot of responses. It was all fantastic feedback. We then set up a precious metals working group, which represented the banks, the refiners, again, trying to make sure that this code is developed by the market for the market. And then ultimately, it was the LBMA executive that held the pen to make sure we made the changes that made sense. The code was then implemented in May this year as well. And since implementation, we've generally had good feedback. There's also been a lot of questions. There's also been a little bit of nervousness as to what does this mean? How do we implement this? This doesn't make sense for us. We're not a bank. I've had all those types of issues highlighted. However, what's good in those questions is people are actually taking note. People are actually listening. They're waking up that when we send something out, they need to do something with it. What they need to do with it, there's a lot of questions, but nevertheless, they're making note. They're not ignoring, they're not deleting that email that comes from us. So what's the purpose of the code? It's to provide for best practice. It's to provide for the minimum standard. This isn't a case where we put in standards, you reach those standards, you can now sit back and forget about it. It's about putting in that minimum standard and then making sure that those standards can continue to improve. To monitor those standards, do they make sense for your business structure? How do you apply the code? Well, as I said, what works for a bank does not work for a refiner. And in fact, what works for one bank may not also work for another bank. So you have to make sure when you apply the code, you apply it in a proportional way. Go through the principles, what is relevant, what isn't relevant, and if it's not relevant, make sure you have some thought process behind why it's not relevant. It's not good enough to say, oh, I don't understand what this principle is trying to achieve, and therefore I'm going to ignore it. That doesn't work. And then tell the world you're complying with this code. It's good news. It helps business. It provides integrity. And I think as you heard this morning, one of the three key aspects that the LBMA has been focused on is integrity, engagement, and transparency. This code helps achieve all three. Sign that statement of commitment, publish it on your website. Allow people to recognize the fact that you are trying to do the right thing. Use it to your advantage. How is the code structured? Well, it's structured in, I have 5 sections. There are 5 sections. And then towards the end, you have some examples to try and make those sections a little bit more relevant, to make you understand how those sections would apply to real-life examples. You've got ethics, governance, compliance, risk management, information sharing, and then business conduct. And I'd be surprised if nobody understood what those terms meant. Everybody should have something within their organization that speaks to those 5 topics. However, how you are organized and what level of commitment you have to demonstrate compliance would vary. This document allows everybody to start on the same level playing field. And again, I mean, I'm not going to go through all the details given the time, but come and speak to me afterwards and we'll talk through some of the specific sections. But at least the first 3 sections, I would expect those to apply to every organization. Ethics, acting with integrity, having a compliance infrastructure, addressing your risks, making sure you protect client confidentiality, none of that should be rocket science. And to a point, it's actually quite straightforward. But what your compliance looks like, what your governance framework looks like, what controls you have in place to protect client confidentiality will be very different from institution to institution. And this helps to actually explain that a little bit better. So I've already addressed proportionality, thinking about, how does this make sense for my organization, making it relevant for your organization. In terms of implementation, do a gap analysis because you probably have a lot in place already. Figure out what else you need to bridge that gap. Bridge that gap, sign that statement of commitment, publish it on your website, and make sure it remains true and accurate from there on. All LBMA members, you have 12 months to implement from the date of, from May 2017, so you must implement by June next year. And then thereafter, you have to renew your commitment. And then thereafter, we will also make sure that the code remains relevant. So that was on the code. Now moving on to the other objective that we had under conduct and transparency, and that is trade reporting. This time last year, we announced that together Boat and Attila had been selected to provide the trade reporting services. Both Boat and Attila have been working very hard with the market. They've set up various committees, they've set up various technical groups in trying to define the scope of that reporting because we actually had control of what we think is relevant when it comes to reporting, what we think is actually what makes sense for this market. It wasn't a MiFID requirement. For those who actually understand MiFID, also understand how complicated the reporting requirements are under MiFID. This was not meant to be another MiFID, and it hasn't been. We've had good feedback. In fact, we probably were a bit too engaged with the market because the only criticism we faced when we went through the consultation is, can you stop updating that template? We were only updating that template in response to market feedback. We had to draw a line at some point. And again, when I say we, Boat, Attila, David Gornall, all worked together with the market to make sure that we got the right result. And again, I'm delighted to say, September this year, we went live with that reporting requirement. Market-making members, some full trading members have already started reporting. We're hoping Q1 2018, we can actually publish some of that information, making sure we protect confidentiality, making sure that all sensitive data is protected. This isn't about catching anybody out. This isn't about market abuse analysis. This is about providing transparency and therefore more confidence, therefore more awareness, and helping the LBMA with lobbying efforts. When we go to the regulator and we say gold is not the same as any other commodity, and they say, well, how is it not the same? What do you mean it's a very liquid asset? Where is that data? Hopefully, we will have that data come Q1 2018. So thank you very much to Boat, Attila, David Gornall in actually helping us achieve the commitment under trade reporting. And just to summarize what's expected, all local London, local Zurich, spot, forward, and options are all going to be reported. Client data will be withheld. Nobody will be able to identify what trade belongs to what client, because we are very sensitive to client confidentiality here. So why did we bother? Primarily to keep MiFID out of this, keep MiFID away from the spot, forward, and option markets as far as the precious metals is concerned. And we're hoping we achieve that, showing the regulators that we are self-regulating. We are taking matters into our own hand. We don't need the regulators to constantly be imposing rules that sometimes don't even make sense for the market. And talking about rules and regulations that don't make sense for the market, net stable funding ratio. probably the most important piece of regulation that is going to be impacting the precious metals market, and one that I've spoken about every year. And every year, unfortunately, I don't have anything positive to say about this. Yes, we continue to lobby. Yes, we continue to speak to the various member states in Europe. But we still got a lot of work to do. And the struggle that we have, we don't have enough market participants supporting us by going to the authorities and challenging them on their implementation of the Basel standards. So by way of background, what is net stable funding ratio? To put it very simply, it imposes an 85% haircut on all unallocated gold transactions. So the cost, one second. I'll talk about the impact in a second. But when does this go live? Some piece of good news. This has been delayed in terms of the implementation. So we are looking at a go live of possibly 2020, but probably more likely 2021. So that's the good news. We have more time in lobbying against the implementation of NSFR. However, I don't know if we're going to be successful in getting what we want. Why is this important? And again, by way of reminder, the cost of financing, that's going to significantly increase. If the banks now have to support the cost of financing by actually having and basically taking on the hit of this 85% haircut, are they going to really accept that cost, or are they going to pass it down? I would probably guess they would pass it down. Alternatively, they may reconsider their business model and question whether they should even be part of the precious metals market, given the costs imposed upon them. And actually, if that ends up being the decision, then that's more damaging, because the liquidity pool then available to the end user, to the refiners, is significantly reduced. That's not what anybody wants. But perhaps the biggest impact, and one that I hadn't focused on as much previously, but in the last 12 months, it has been the key focus, is the impact this is going to have on the London Precious Metals Clearing Limited, LPMCL, the services they provide under the clearing and settlement services they offer. It's going to become a very costly business, and the question will be, can they continue to provide that service? If you want to settle gold through the LPMCL, and they are no longer there, what is the alternative? And this is what we've been very much focused on. I have made numerous trips to Brussels. Yes, I enjoy a lot of chocolate, but at the end of the day, I could cut down on some of those trips if I could. But I can't, because the member states, European Parliament, European Commission, still don't understand how important and how significant this is. So we've got to continue speaking to them, explaining to them, hopefully when we get data, showing it to them, demonstrating to them about the impact that this would have. So we do have a position paper, and this position paper has been sent to a numerous amount of stakeholders. Get in touch, I will send it to you. For those who are based outside of the European Union, and I know if you're in Australia, Australia is actually going live with the implementation on NSFR in January 2018. Switzerland is looking at introducing it next year. Japan, Russia, India, they're all working on this. You all need to be speaking to the relevant authorities and lobbying against this on a global level. And again, we can actually provide you a lot of the background information. Like I said, I've got a position paper. I can share a lot of the comments, a lot of the preparation that we've done for our meetings with the European stakeholders. But we really need to make this a global effort and not just be focused on the European side. Another key piece of regulation, MiFID. This has been the bane of a lot of banks this year, and in fact for the last few years. But MiFID is going live in 2018, January 2018. There's been a lot of struggle in understanding how this impacts the precious metals market. And the key question there has been, what is in scope and what is out of scope? For those who are on the LBMA member distribution list, I sent out a regulatory briefing just last week, highlighting and confirming the LBMA position The LBMA believes that any unallocated, physically settled forwards are all out of scope. And in fact, allocated or unallocated, it's almost irrelevant. What's relevant here, if it's physically settled, it's out of scope. So if it's out of scope, then fortunately, a lot of the rules and regulations do not apply under MiFID. However, there are aspects that will be in scope, and those that are in scope, you then get hit by position limits, position management, reporting requirements, various rules you then need to comply with. And I know tomorrow at the Regulatory Forum, Declan of JP Morgan, he will be providing an update, a little bit more detail on MiFID. So please do attend if you would like to know what some of these key, buzzwords mean. The other regulation that goes live in January 2018, benchmarks regulation. Currently, we have 2 precious metals benchmarks that are regulated in the UK, the LBMA gold price and the LBMA silver price. Come January next year, the regulations will also be extended to platinum, the platinum price, the LBMA platinum price, and the LBMA palladium price. We remain engaged with the administrators and the regulators to understand the impact, and even today, it's October, and we're only a few months away, we're still finalizing what the impact really means for the 4 precious metals. And actually, the same applies with MiFID. There still are a lot of questions that remain unanswered. So it just shows we're 3 months away from implementation, and there's still quite a bit of work to be done. Fortunately for precious metals, we've got LME who are helping on the platinum and palladium side. And then this year, IBA took on the responsibility for silver. They already had responsibility for gold, and they'll be making sure that they communicate the impact to the LBMA so we can actually help our members understanding what this means. So going back to the silver price, first of all, thank you very much to CME and Thomson Reuters for helping the LBMA transition the silver price to a new administrator, ICE Benchmark Administration. The decision was taken in June to transition, and then in the last almost 3 months, IBA worked with the market to go live with the LBMA silver price early October. They went live with silver with 9 participants. They introduced clearing for silver, which allowed to increase participation for silver. They also introduced clearing for gold back in April, again, to support an increase in participation. A lot of work was done, a lot of, again, engagement with the market. We had to run a request for proposal when it came to deciding who the new administrator would be for silver. We had to work with the market. So a constant theme here, engagement, communication, making sure we are reflecting feedback that we get from our membership. And again, tomorrow at the Regulatory Forum, Matt Glenville will be presenting on benchmarks. So again, I do encourage you to attend that and hear a little bit more detail as to what the regulations mean and what's happened under silver and gold. So moving on to another piece of regulation, and I appreciate I'm only scratching the surface when it comes to all the various regulations. There's a lot of work that goes on behind the scenes, and also we do have a Regulatory Affairs Committee that help with this, but also I do rely on various lawyers, compliance people, external law firms to help in actually addressing the issues and for us to know what this means for the precious metals market. Another one, REACH. This stands for Registration, Evaluation, Authorization, and Restriction of Chemicals Regulation. Quite a mouthful, and it's quite an administrative, heavy regulation. It requires registration of chemicals, raw material that are being imported into the EU. The final registration deadline for this regulation is May 2018. Up until now, gold and silver, they have been addressed. The only precious metals that remain unaddressed is platinum and palladium. So again, the LBMA has come up with a position paper very similar to the gold position paper. For those of you who might have been there when we put in a position paper for gold, may remember that we said to the UK Health and Safety Executive that good delivery gold bars are a finished product, therefore investment purposes, and so therefore should be out of scope as far as REACH is concerned. The HSE actually accepted the argument, said it is unlikely to be challenged, and it hasn't been. So we are hoping that for platinum and palladium, we can use the same rationale, provide some factual information that is relevant for platinum and palladium, and working with the LPPM and the EMPF, the European Precious Metals Federation, sorry, I got the acronym wrong, we can submit a position paper so that platinum and palladium can also be out of scope. That is, good delivery platinum and palladium could be out of scope under REACH. And again, for those who are interested and would like more information on this position paper, please get in touch. We can circulate that as well. Now moving on to responsible sourcing and all the work that has gone on in relation to responsible sourcing. Firstly, EU conflicts minerals regulation. Fortunately, this does not go into force for next year. I think we have enough to be dealing with for 2018. EU conflicts minerals regulation is in force from 2021. And what this regulation is saying, if you are importing 100 kg of gold, you need to make sure you comply with the EU conflicts minerals requirement, which requires an independent third-party audit. Also, under the EU conflicts minerals regulation, there are reporting requirements. We are looking at basically working with the banks and the downstream in terms of how to meet some of these reporting requirements. Additionally, the European Commission will be publishing a list of refiners that are approved. And to come up with that list, they will be assessing, and they have been assessing, compliance with the OECD due diligence guidance. So the LBMA, in the last 12 months, on a voluntary basis, went through a OECD alignment assessment to check, is the LBMA responsible gold guidance aligned, and to what extent is it aligned with the responsible gold, with the OECD due diligence guidance? If it's aligned, and the refiners are, the good delivery refiners are in compliance, then those refiners should find themselves on the European Commission refiner list as well. That is the objective here. I am, again, delighted to say we actually had good results under the alignment assessment, but we shouldn't become too complacent because there still is a lot of work to be done to make sure that we continuously improve the standards we've put in place back in 2012, but make sure we continue to improve them to comply with the regulatory environment. So a little bit of update in terms of what that feedback was under the OECD alignment assessment. Strong governance, clear responsibility and accountability, excellent reporting requirements for the refiners, all the good news that we received in terms of feedback. But there is still room for improvement. So we've taken that on board, and the key outcome for us this year, and some we've already achieved, is an updated responsible gold guidance. A lot of you would have seen version 7 that was issued recently. That reflects a lot of the feedback that we received under the alignment assessment. We've also enhanced the auditor training program because, of course, the audit is only as good as the auditor. The auditor needs to understand what the risks are, how those risks are being addressed. Does the refiner's compliance program address what they've identified in terms of risks? Having webinars for them, having bilateral meetings with them, making sure they're done continuously and not just once a year. We are very focused on actually improving that auditor program. The other improvement has been making sure that the use of the refiner's toolkit is now mandatory. Every refiner must use the toolkit and make sure that every question on that toolkit is being addressed. And if some questions are not relevant, say so. And then finally, the other key point is bullion bank reporting. And this, we've actually set up a finance working group Financial Crime Working Group to help us get a template in place for the market so that nobody ends up over-reporting and no one ends up under-reporting. So I'm going to just jump this slide because I've run out of time, but my colleague Neil Harby tomorrow morning will be addressing what's changed in the responsible gold guidance and the responsible silver guidance that was implemented. So, but going back to the Financial Crime Working Group, we set this up only recently this year. They are looking at best practice. What is best practice across the market? What standards should we have in place? It's not just about where you are sourcing from. You also need to be focused on where you are actually selling and how far you can actually do your due diligence. Incident management process. We've got a formalized process in place that talks us through in terms of what the LBMA does when there is an issue in the market. When there is a media report, some information we might receive from the membership, from the committees, from the authorities, what does the LBMA do when it gets that information? We are engaged, we speak to the compliance officers, legal, lawyers, external law firms, internal in-house law